Thank you, Jens, for the introduction.
And thank you very much, Jens, as well. Amrit, real pleasure to be with you today on this, and looking forward for a discussion about customer centricity and RegTech.
Great. Thank you so much, Janos. I actually did your course online, HKU, and I turned you into a celebrity when I changed using the mirroring and then had you on TV. So from an academic point to a superstar. I'd like to just ask you, just for the audience sake, to give just a brief outline of your experience and your journey so far in the FinTech field.
So thank you very much for this, and thanks for mentioning the Hong Kong U course. It is a very good course, and the idea very much here was to invest in human capital. I think investing in human capital is even more important today. We are, slightly over 10 years of the last crisis, and that's kind of where I started my FinTech journey. I went to university to become a banker, not to become an entrepreneur. But obviously the economy was not the right time, not the right moment. I had to create my job. I studied finance, I studied law, I did some startups before. And so if you merge startups and finance, you get to FinTech. Now, I think as most startups and founders, you need to find a niche. The niche that we had were building an accelerator that was focusing on bringing startup in Asia. And then the second one is more personally working on the regulation of a new sector and industry. So I did my PhD at Hong Kong U Law School. This is why you've seen me on that course. And this is why I kind of have a quite sensitive understanding of compliance, startups, and finance, and how we can reach that balance. And I wanted today with you and with the panelists to be able to share a bit more about market awareness on what good compliance can look like and what are some of the misconceptions.
So, I mean, thank you for that. I understand that the FinTech did sprout out from the 2008 to just give another sort of avenue for peer-to-peer lending, because banks were actually at a credit crunch themselves and didn't want to lend anymore. But then also it spilled over to the developing emerging markets. And so FinTech has actually been evolving over a decade, and there's still a lot of teething problems. But I think for the audience sake, I'd like to also have an established baseline of the differences between compliance in the traditional sense and how it used to be and how it's transformed, or is there some parallels with what there is already adapted or adopted from that to the FinTech world?
So I think there's an interesting element about how compliance has changed. If you take first one step back, the world has changed. The world is more digital. And I think if there was to ask anyone here to actually, and you can do this on the chat, but if on the chat you were to write, if you think compliance, you think whatever word, type it in the chat. But my guess feeling will be paper, manual, clumsy, clunky. Analog compliance in a digital world makes no sense. It's irrelevant. And I think what the financial technology industry has shown is a different way of doing compliance is actually possible. Now, compliance has a purpose, and I think all of us here agree on one thing. Banks are keeping our money is difficultly earned, even more so today. So we want to make sure that this is protected, this is safe. And therefore, the amount of expectation we put towards a financial institution is higher than what we put to an e-commerce company. This is why compliance in finance is often what we look at as a red tape as opposed to an enabler. However, I think what people got to realize is compliance can be done differently whilst upholding the mandate of regulator of consumer protection. Think about eKYC. I think most of you here, if you're in Hong Kong or if you're in the UK, you've opened a bank account by filling a paper form. This is time on you, it's time on the bank, and that time has a cost. It has your opportunity cost of doing something else, and it has a man-hour cost on the banking side. Now, if you could digitize that experience, instead of filling a paper form, giving your passport, going at the back, doing a photocopy, coming back, and then sending it to your back office and front office to validate it, and instead doing this on an app with a scan of your passport and then a live recognition of your face, here you go from a two-day to 6 weeks process to 5 minutes. And this is better for you, it's better for the bank, and I think overall, we haven't lost on consumer protection. The rise of challenger bank in the UK or the rise of virtual bank in Hong Kong is very much a demonstration that you can actually bank people, onboard them in a different way, but still maintain compliance standards.
So it's great that you say that. Now, I guess, with the regulatory prongs, you were talking mainly for the consumer-centric customer service in how we are managing expectations in this realm. I guess, as I would actually conceptualize when even talking about the transition between a traditional bank and a virtual bank, that I'd always look at tangibles, like I can see a brick and mortar, I can go into the bank, I can see paper, I can see all that stuff. And I guess that the repetition of the pain points that you talk about is valid. However, I also feel that with virtual banks, I feel still uncertain with legislation behind it. Who's behind it? How am I going to reach them and be able to, if I'm at the bank, I can see somebody and it feels a bit more like somebody's doing something, right? So in terms of customer service for virtual bank, how would I be comforted?
So first of all, there's a target market element, and then I think there is an operational element. I think if you think from a target market perspective, virtual banks or challenger banks is not for everyone. There is a niche, and the reality is Revolut in the UK, which is one of the world's most successful challenger bank, it's only 5% of the balance sheet of HSBC. Revolut is a rounding error in financial services. Now, it doesn't mean that they cannot become a dominant player going forward, but I think it's a reflection that not everyone wants or not everyone should bank with a challenger bank or a Revolut, right? So that's the first element, which is the fact that you personally have a apprehension is, I think, reflective of people more broadly. There is no issue around this. It's just a niche market that is currently being served. Now, this brings me to the second point, and I think it's an interesting point you raise. The experience of going into an incumbent bank, a traditional bank that has branches, by definition is giving you an expectation of some things being slower because you move, because you take your time. Now, compare this with your habit of receiving instant notification on your mobile phone. When you're on your mobile phone, you expect things to happen on the spot. When you go physically to a branch, because there's walls, because there's a teller, because there's a queue, you don't expect instant reply. So what happens here is, on one side, you have people which are with traditional bank that are used to more a brick and mortar experience, which is slower. And then on the other side, you have then people using challenger bank that have an expectation of immediacy, instantaneity. Now, this then brings to the third element, which is customer service. There is a fine line on how many customer service staff are needed in order to essentially operate a challenger bank. The first one I would say is, we typically, if you think about your banking relationship, you may have had problem once, twice, maybe 10 times, but you've been banking for 20 years and you had 10 problems in your life. That's less than 1%. Now, startups have to be effective, and they cannot staff for 100 essentially you always having an issue. The reality is most of the time you won't. However, I think what can be better done is, what tool do you want to use? If you want to essentially, if you don't have a customer service which is proportionally staffed, don't provide, for example, chatbots, or don't provide a chat functionality. Actually provide email. Because when I send an email to someone, I don't expect that person to respond to me straight away. So I think communication tools and technology actually can be used in order to create a better, at least more aligned customer experience, so that you prevent having issues on things like trust. You had, for example, today a good element. I mean, today we're using Remo, but Zoom right now is having a lot of difficulties on their security. Therefore, a lot of clients are calling them. It is impossible today to reach out to Zoom. It's because it's a black swan event. And sometimes black swan event can be created by the market, but also can be created by poor technological choices. But overall, are we happy that we can be onboarded in 5 minutes? Yes. If so, let's keep on improving that relationship.
Mm-hmm. Have you had yourself experiences with a virtual bank that you would like to share?
So I think for me, the experience is obviously a bit different. I come from a background where I moved in many countries often. So I don't have one banking relationship. I actually have 5 banking relationships with traditional banks. And I've obviously been in the startup ecosystem and fintech startup ecosystem. So for me to do what I do, I have an obligation of testing. And so in the UK, for example, I've been using a challenger bank called Revolut as my primary account. And I think what I've discovered with Revolut is well-funded fintech companies actually provide excellent service. It is covering 99.999% of my daily life on my daily needs. It's efficient, it's quick, it's adding value to my life. There's been one instance where I had an issue. But I think that issue was essentially an issue of simply them rechecking accounts. My paper was not in order, and then I had to send it to them. It happened to them at the wrong time. It happened to them during a Christmas period, which means that, less people, more issues, longer communication cycles, more frustration. But however, I think once it was a difficult experience, one of the things that I remember is I have another choice. I can go back to an incumbent. I can go back to an HSBC or NatWest in the UK. But the reality is for 99% of my, so any alternative is less good. The second one is, if I wanted to switch, and I think that's an interesting point, is in the UK, it's actually very easy to move banking relationships. I can literally switch my Revolut account to Monzo, which is another challenger bank, or my NatWest again, and going back to my previous relationship, by 2 clicks. And then every automated payment is transferred over. So this is a kind of a long-winded answer to say, yes, I've tested quite a few challenger banks. Yes, I've seen some of the limitation. However, on a net basis, it's overall very positive given what I've been doing.
So I guess actually in what you say, voting with your money is actually something that currently people can do at ease, far more than a traditional bank would actually offer you. So you actually really do have a lot more of the convenience. So in terms of customer service and the teething problems that we face with technology and fintech companies, I think when we weigh with the pros and cons in the bigger scheme of things, there is definitely a lot more time benefit and convenience benefit. Because if I was to actually go and change banks in Hong Kong, I would actually then need to fill up forms. And then not only that, if I was to link my Octopus card or my credit cards to an auto pay, I'd still have to do all that paperwork and domino effect, all that. If you were to look at the direction of improvements for customer service as you see it from the experiences that you've had, would you then say that we've got a long way to go in terms of, and would it be the banking regulatory, or would there be other engagements with other legislations that would need to be done in order to facilitate the success and growth of the fintech institutions or challenger banks?
So I think on the point that you've been mentioning, specifically on customer service, there is 2 parts of it. Like I was saying, regulators have one of 4 mandates. Essentially, it means that regulators try to do 4 things with different level of intensity, but this is consumer protection, which falls under customer service, financial stability to avoid what is currently happening, prudential regulation, which is supervising that a firm is doing things okay, and then competition. Now, depending on which market you are, regulators will have one mandate stronger than the other. If I give you the example of the UK, the dominant mandate is competition. If I take the context of Hong Kong, the dominant mandate is financial stability. So what it means is when you have one dominant, you have one which is slightly less important. Now, saying this, it means another thing, which is the obligation, and I think that's one of the good things about financial services and compliance. Things are actually quite well written out and laid out. Now, the obligation of a financial institution to provide a customer service report or a request or respond to a query, there's actually timing which are mandated by the regulators. And for example, in the UK, if a financial institution doesn't respond to you in 20 days, only then can you escalate it onwards. And I think this is what we're also realizing is startups are in a weird spot, which is they're fully digital first. They have a capacity of doing everything at any time. On the other side, you have incumbents that don't respond to their queries and customers within a day, but they go, it doesn't matter because anyway, I have another 20 days. And somehow you don't expect your incumbent to respond to you faster. So yes, you could update this, and therefore it would force customer service to be done faster. The second one is actually, I think one of the best force in the market is competition. And sometimes in certain markets, the competition drive will not necessarily come from the financial regulator. Every country has an independent competition authority or committee that is here to stimulate the economy. And I think this is one of the things which is the most important. People stay on product that they like, and the product that they like are more competitive, either in pricing, either in experience, or either in service. And I think it's for us as consumers to choose, what do I value the most? Do I value the most the capacity to do my whole life online and every now and then have to talk to an agent over a phone? Or do I value the most the capacity to fill a paper form and being able to go to a brick and mortar branch in order to get my service? And let people make those choices. But I think startups operate in niche, startups operate in their own benefit. But I think most importantly, if there's one thing that we have to credit startups for having done is startups have always been pushing the boundary. And the reality is boundary in financial services, just like healthcare, is a very protected boundary for right reasons. Mm-hmm. So we should keep on supporting startups. Now, it doesn't necessarily mean that we necessarily want to have that banking relationship with them, but at least, the very least, we should support them for making us better. Because the reason why today an HSBC has a pay me system in Hong Kong is because you have more competition coming up from the startup. And I think for this, one more time, everyone here is benefiting from that activity and proactivity of startups.
Great. Thank you for that. And from that, we will round up so that we can move on to the panel discussion because we're just running out of time. So, so thank you for the fireside chat, and we'll move on to the next part of this session.
So what I'm going to be doing is I'm going to be promoting Nick as a panelist and also Simon. So if you simply give me a second, I will be able to update everyone. Nick. So I have Nick now. Nick, you should be a panelist now, and you should be able to share your camera. And then Simon, I can also see you, Simon. I'm going to make you a panelist. And you should now be able to share your microphone and camera, Simon, on your side as well. Excellent. So we now have everyone, and first of all, everyone, thanks for being there and taking on part of that panel. Maybe let me start about, if you were to describe compliance in one word, what would be that word? So maybe starting with you, Amrit, and then we'll go Simon and Nick.
I would say accountability.
Okay. Simon?
I'm going to come from more on the financial side. I'm going to go and use two words: necessary evil.
Okay, sounds good. Nick, what about you?
Yeah, it's I liked Amrit's idea actually. It's effectively sums up the risk-based approach. It's Simon, you're right. It is a necessary evil. But it doesn't have to be an evil. It is necessary. What we're trying to do is trying to make it as less evil as possible. I guess that's why we're here talking about it.
So maybe, Nick, if I was to ask you, on what have you seen in the RegTech space, for example, that has been able to improve essentially customer experience as a use case that comparatively you wouldn't necessarily see in a traditional bank? Yeah.
So I think you've touched on a couple of points already, Janos, and this comes down to customer communication, speed of reply, how expectation from customers. You know, if you apply to a traditional bank, I think the mindset generally with customers is, you know, while I would like a response straight away, the chances are someone's not going to look at this and get back to me for a few days. What I think the fintech sort of startups are trying to do is get that answer to customers, whether it's the answer that they want to hear, but at least beginning that line of communication so that you feel that you're valued as a customer, regardless of whether the answer is what you're looking for.
And Simon, I think before us being on the panel, we were looking at roles and responsibility on bad experience, and I think for you, regulators have an important role to play in that lack of good experience from consumers. So can you maybe share a bit more about why do you think regulators are maybe one of the most important stakeholders that needs to transform itself in order to change our experience around compliance?
Yeah, certainly. So look, my background has been in fintech space for the past 10 years, and I've been fortunate enough to work with various financial institutions like asset management companies and banks all together. And I've attempted a lot of projects in solving a lot of these compliance issues. And one of the things that what I've noticed in some of the issue is that not everything about compliance can be solved by technology. So for example, in terms of onboarding, you talked about earlier, Janos, in your onboarding, you can digitize the paper process and you could digitize the approval process and whatnot. But what you cannot digitize is waiting for the client to give you the information. So there are aspects about the regulation that says, okay, in order for you to onboard this client, you have to obtain this information. For example, you have to get complete clarity of source of funds. Now, sometimes we can't give that to you, or it's difficult to sort of remember where all the source of funds are going to be. So these are the things that even a client can't tell you, that technology aren't able to solve. And these are regulatory requirements. And from my perspective, if technology is to be the differentiator, if a regulator says, look, I really want to push the fintech boundary, I want to make fintech as a competitive advantage to my city or to the region that I'm overseeing, the regulator must be able to take the risk and say, so well, look, I'm going to give you a laxer set of rules because I'm willing to trust the technology that you've developed. If I'm willing to trust it, then I'm able to give you a different set of rules that I believe your technology can overcome, instead of just porting the old rules and apply it to the technology. Because if that's the case, nothing's going to be, they're going to be constrained. The fintech will be constrained by the same limitation that the traditional bank faces.
So maybe Simon last was a very good point. And before going back to you, Nick, which is I think Simon is really talking about risk-based approach, proportionality, and how regulators can actually embrace this a bit more and be essentially have the means of what they try to achieve. But before I go on this to you, Nick, Amrit, from your perspective, right? So as a business owner, would you recommend your bank to a friend? I mean, we often talk in the startup world about a net promoter score, right? And it seems that you're using a traditional bank as a financial institution. But would you actually go and say, yes, I would actually fully 100% recommend my traditional financial institution to a friend if they were to do banking, in the same way that you may recommend, for example, using Netflix?
So traditional banks is what I can compare with, not a virtual. I tried to do a virtual bank, but I tried to enroll Revolut, but they have a demographic limitation. It had to be, the download had to be for the UK. So I didn't ever get a chance to do the for that, but I can actually draw parallels quasi-parallels for the Gatecoin that I attempted to open. But in my business, when we talked about what's important about the source of funds just now, when Simon talked about it, in the consequences of the travel element, I can only say this: the source of funds for a trading company meant that it came from an unrelated source that was linked to some bad person, and that consequentially meant that a US visa was cancelled. So I can only say that from what I know about the importance of source of funds, I agree with Simon. And whether it is going to be a brick and mortar, an incumbent bank or a challenger bank, if there is an underlying legislation that actually is entwined between the two with banking licenses, this cannot be ignored because of the source of funds being really crucial. So I don't know if that answers the question, but of course, when it comes to whether I should recommend a traditional bank over Netflix, I would say that, you know, it doesn't matter which bank. If they have a compliance issue, it's actually good for your sake in some ways, because now that person who's got his visa canceled can't go back to the US. Had it been that the compliance had been done, you know, they could have said no to the money. But how many degrees of separation does that banking trail have to go back? That I don't know. I'm not in compliance, but I think, you know, is the source of funds for that trading company just from 1 degree of separation, or is it from that recipient's prior money received into their account? How far does it go? How far do you have to trail back?
Mm-hmm.
Amrit, I'm not familiar with this specific scenario that you just mentioned, but to sort of cover Simon's point, we are as a fintech in Hong Kong and as a business that moves money, you are handcuffed slightly by the regulator, and whether or not you're regulated yourself, you're often working with regulated partners. Now, we can use technology or leverage on technology and bright and clever ideas to make things more efficient, but ultimately your risk appetite and your restrictions really only goes as far as the regulated partner that you're working with. So we as a fintech are desperate to work with those underbanked companies, individuals, people who want a faster, better quality service. But ultimately, if they are participating in something or acting in an industry which is perhaps outside the risk appetite of a bank, it may well be outside the risk appetite of ourselves as well. Until sort of the regulators, I think, relax their attitude towards the fintechs in that aspect, I don't see a great change moving forward. What we can do is improve the customer experience from a compliance point of view. You know, what might take 4 weeks with your high street bank, hopefully might only take a day or two with a fintech. That's the idea, that's the dream. And that's what we're trying to improve from a financial industry perspective.
Yeah, and look, I completely understand that point, but at the same time, I kind of feel that's also the unfortunate reality that we have to live in. Because, look, at the end of the day, to me, the value of fintech is the democratization of financial services. The fact of the matter is, if you look at the most successful fintechs that we have in Hong Kong, WeLend, 8 Securities, which has been recently purchased by Sethi and others, their success is because they are able to serve those that are not being served by the banks. They're able to provide services that are that the banks typically don't provide. And I think it's the same for all the other fintechs out there now. And that's why regulator, I think it's crucial. I mean, for somebody, for a fintech or for a startup or even ourselves, we've been in ERI has been around for 30 years, and we tried our very best to work with the regulators and really try to move the needle. But at the same time, we feel that, look, we are able to solve this. You have to trust our technology to be able to solve this. And if the regulator just, well, yeah, okay, so I'll trust you. If you can produce the consistent result every time, then I'll. If the regulators are willing to do that, then it opens up all sorts of possibilities for fintech, whether it's startup or incumbent. So I think regulators should really, well, I guess fintechs or ourselves should really look into work more closely with the regulators and says, look, this is something that can work. We can demonstrate it to work. So trust us.
And I would say, as an extension of what you were saying, Simon and Nick, and also maybe going to Amrit's point, which is, in a way, the benefit that fintech startups have is small is beautiful. And the reason why I say that is, if you think that regulators are overall under-resourced, right? They don't have enough staff to monitor the whole market. Now, startups are small. Their balance sheet is small. Their numbers of customers are small. And I think being more proportionate in your obligation towards smaller players, smaller startups, actually makes a lot of sense. And we've seen this, for example, in the context like the UK, and I think this is where, I think as a community, one of the benefit would be not just maybe to knock on the regulators, but also the competition authority saying, we need to have more competition in the market. And I think one of the benefits of Hong Kong, it's a very competitive market. It's competitive on rent, it's competitive on work, it's competitive on grades, it's competitive on school, everything is competitive in Hong Kong. But I think this is where adding a bit more competition into the market is good. And the benefit, I think, that from playing devil's advocate, I was saying Revolut is a rounding error. If Revolut was to go down tomorrow, who would remember? There's a challenger bank in the UK, Bo, that when essentially they shut it down last week by RBS, no one heard about it. Why? Because the transition has been well done. And I think regulators need to realize that if you're small, you can also close gracefully, and therefore you should be allowed to test certain things that otherwise you wouldn't necessarily do. So I think being proportionate, I think that's the point that Simon was saying and Nick and Amrit, which is try to be proportionate to what you try to achieve. JP Morgan has 40,000 lawyers, 14,000 lawyers. It's more than Facebook has tech engineers. A startup doesn't even have 100 staff or 200 staff. So I think this is what I think regulators need to change their mindset. The resources behind are a bit different. Amrit, maybe I have another question on you, which is, if we had a blank sheet of paper and we say, I want an ideal bank, the three key things that will make a bank perfect for you. You can design on a piece of paper and say, this is my perfect bank. What should it be able to achieve? Okay. And then Simon, I'll have a similar question for you.
The ease to transfer money, to probably also give me a spending tracker and stop me if I had a target, and because I'm say maybe, but it's aggregated all my sort of income together, and then stop me from buying that extra pair of shoes. Doesn't work, because then it means that I'm actually reaching my saving goals. That would be another thing, especially if you're not that disciplined yourself to save. And the third thing would be to give me, I guess, a smorgasbord of services that I could actually onboard very quickly. It could be an insurance, or it could be a mutual fund, or a stock trade without me having to do a lot more KYC, because they already have everything converged. So those are the three things, yeah.
What about you, Simon? You have a magic wand to create the perfect bank. What should it be able to do?
Honestly, if I have a magic wand, I'll turn everything into some sort of a private bank where you get personalized service. Doesn't matter how much you have within your deposit. Now, obviously, I don't own the ultra high net worth bracket, and that they get the people that ships you over to a very nice office with their champagne to serve you. I don't expect that, but at the same time, what I do expect though is when I approach the bank whether physically or digitally, the information, the data that is being displayed should be accurate, should be timely, and the transaction that I do should be efficient, and it should be under my personal financial environment. So it should have an understanding that, hey, look, your cash flow, I mean, you spent, you know, $2,000 over your perceived credit card limit. Maybe it's time for you to sort of hold back. These type of personalization might be great, but right now for me, just give me the right information. Just give me the right information at any time that I want, and be able to transact my transaction as efficiently as possible. That would be sufficient.
And maybe Nick, on your side, and by the way, for the audience, I think it's really great that we can have all of us today on this panel. If you have questions, put it in the Q&A like this, we can take them. But what I would like to do now is, Nick, maybe either you can answer one of two things. Either what is for you an ideal bank, actually as an individual, irrespective of, you know, the need tab, or what is the biggest pain point that you've seen that, and is what Simon and Amrit has been saying, you know, echoed with what you've heard otherwise?
Yeah, it's very interesting listening to Amrit and Simon there. I mean, at NEAT, we're trying our very best to get there, to build this perfect sort of bank one day. We're not a bank ourselves. We will hopefully be one day. We're a very long way from that, but we listen to our customers, and we know what the pain points are. Amrit and Simon have named two of those things, you know, clearer, cleaner customer communication, the ability to sort of seamlessly move money across borders, locally, wherever they like. And ultimately, you want things to work properly without having to reach out and speak to someone. But if you do, if there is an issue, you want an answer there and then. Ideally, you know, as the problem arises, you want a solution available, potentially from a real person rather than a robot. We're a very long way from that. Problems are always cropping up. I mean, as an employee of NEAT, but also as an individual who you know, operates bank accounts themselves, that's something I would like to see as well. But really, from a compliance point of view, what we're striving to achieve is to reduce that requirement for new customers or existing customers to provide us with more and more information at KYC level or a transaction monitoring level. We want to know, we want to be able to educate our customers why we ask these questions, but also make sure that they're providing the right answers and why we're asking them. Can you provide that information? Are you looking for an online digital banking experience? And if you are, can you provide the information that we're acquiring in the right way? You know, if you conduct your business or your day-to-day life in a very sort of physical sort of paper-based admin way, maybe an online digital bank isn't the right solution for you. Maybe you're best off going to a branch, working with one of the traditional banks, and that's why I see there's room in the industry for both different types of banks. You know, different people look for different things, but what we see, we're trying to help those that are moving away from that paper-based lifestyle, and hopefully, as sort of we grow, we're learning every day. Hopefully, our customers and new customers will as well.
What I'm going to do is, because we have another 5 minutes, if anyone has a question, I see one question here. So I think there's something that was interesting. So it's about security. And maybe what I would like to see is, maybe Amrit, would you agree or not agree with that statement? And then Simon and Nick discussing it. So virtual banks are easier to hack. They're smaller and no guarantee for security. So before Nick and you, Simon, answers, Amrit, would you agree or disagree with that statement?
I would disagree.
Okay. And Simon and Nick, how would you approach this on that question?
Nick, go ahead.
Oh, thank you. I don't think there's a yes or no answer. Firstly, I would disagree on the basis that the measures you put in place when you begin a company like an online bank or an online financial institution, you have to prioritize customer security, data security, financial security. It's got to be one of the most important things that you prioritize. However, you know, people always find a way, and you know, can you be more secure than a pen and paper locked in a safe somewhere? I don't know. As soon as things go online, yes, of course, people will always come up with ingenious ways to find that information. So I don't think there's a yes or no answer, but certainly from my experience anyway, when you have an online bank or an online financial institution, the priority is always given to data security. Yeah.
So, Simon, what do you think? Do you think smaller banks are more vulnerable?
Well, I think as a blanket statement, I would disagree with that statement. But I think we also have to look in the nuance. At least in Hong Kong, these virtual banks aren't small. I mean, they're new. But if you look at the backers, they're not small. The backers are huge. I mean, Alibaba, come on. But at the same time, you got to understand, I think Nick already alluded to it. Before any license is given, these entities have to prove they have the capability of securing their system and their services. ERI, we work with a number of virtual banks, and we service over 300 banks. So they are using, I mean, inside, they're using pretty much a very similar system than a lot of traditional banks. The only difference is their services actually is accessed via virtual means. So no, as a blanket statement, I wouldn't necessarily say that they are less secure because they are small. But I would say, I mean, at the end of the day, it is about the policies, it's about execution, and it's really depending on each company and how they execute their security policy and how quickly they react to any security breach.
Sure, and I think actually it's a nice way to as a wrapper, because we're talking about proportionality, and I think risk is also proportioned to how big you are. There was a statement that you had a bank robber in the US 200 years ago. It was when you used to move money in carts and trains. And he got caught by the police, and he said, "But why are you robbing banks?" And he goes, "This is where the money is." The point being that the bigger you are, the bigger the price is if you get hacked. And I think hackers have limited time, they have limited resources, and they typically try to go for bigger and bigger the price, because if it does work, the payout is actually quite good. So what I mean is, smaller institutions, they have a capacity of going under the radar for a while because it's simply not worth regulators' time and they're not worth hackers' time, up until typically they either raise or they start to be sufficiently significant. So it doesn't necessarily mean that they have less security, but I think they're less prone to an attack compared to an HSBC that would be a daily target. So I think this is perhaps it on it. We've just passed essentially our time by now, but maybe what I wanted to do is, if you have one closing word that you think it's important for people to remember regarding compliance and how it can better serve customer, please do leave that word with the audience now. And then after this, I would like, if you have time, to stay and then network with the participant on the room to essentially share slightly more about the experience. But perhaps if you had one closing remark, each of you, regarding how you think compliance can be improved and make the life of a customer better, if there's anything that you want to share.
Well, I'll start. I'm going to take this one, Nick. I'm going to take this one from you first. I think at the end of the day, the funny thing about all this talk about regulation is really about data. I mean, at the end of the day, onboarding is about client data, suitability is about client data and product data. For a startup, being able to access the right data, being able to sort of get the right data is the key. And I think where Resolute or the new virtual bank has an advantage is because they don't have all these legacy systems that are fragmented. They can build everything from the ground up, which means that they have a way to sort of make sure that the data are stored properly. Whereas the traditional banks, all their data are bits and pieces, and that's why they're spending in so much headcount. So I think if we are able, if the banks, the virtual banks are able to sort of produce a way, and the startup is able to help, in terms of managing their data properly, that could actually go a long way in terms of making sure they remain compliant and increase the efficiency of the compliance work.
Okay. Nick, you wanted to add something?
The only thing I was going to say is, I think nobody rejects customers, you know, out of spite, on purpose. I think a lot of these banks, these virtual banks, they're conducting onboarding and they're conducting relationships remotely, and they're doing their best to gather that information. Now, they want to succeed with that relationship. They don't want to get rid of people. They don't want to reject transactions. But ultimately, they are really taking a punt because you haven't got that physical paperwork in front of you. You haven't got that physical person in front of you. So, but whilst we're still learning in the industry as a virtual bank or as a financial institution, there will always be disappointed customers who are probably legitimate, but having a bad experience because we're not quite there yet with managing that sort of customer relationship from a remote perspective. So I think that's one of the areas that we can all improve, as opposed to an advantage that the traditional banks have, where you can go in and meet someone in person. That's really what we aspire to be able to educate people so that they have the same expectations as these online financial companies do as well.
Amrit, maybe
you know, there's pop-up shops. And I wanted to see if there was a hybrid, you know, where you can see a virtual bank, but you can still actually go and if there really is some teething issues, that you get a pop-up shop that has some sort of appointment that you can go and see a person face to face. I think that there still needs to be a humanization, even when you're talking about virtual banking. I think that you know, chatbox, the integration of AI chatbox is necessary for virtual banks, but also I feel that you still want to be comforted with having somebody, if you really needed it, to voice out something, because I think that technology still has a lot of limitations to it, and the empathy, the understanding of a consumer still needs to be heard. And I think there's a lot of value when actually you can actually make it a hybrid. That's my.
No, thanks for this, and Amrit, Simon, Nick, thank you very much for this. I saw a quick question. I'll take it just to wrap it up, but I want to make sure that everyone can ask. How does a virtual bank come up with a compensation for a hack? It's quite simple. If you're a virtual bank, it means you hold a banking license. You just so happen to be a virtual bank. And then you'd be subject to exactly the same requirement as a traditional bank. So being called a bank is actually a regulatory standard and name. It's given to you. It's not a right. And virtual banks have essentially very similar, if not exactly the same, obligation as a brick and mortar bank. They're just called virtual bank as a branding exercise. But if they are fully licensed, they will most likely be subject to exactly the same rule in terms of compensation to consumer if there is a harm given, because they're subject to those rules and regulations. So I just wanted to clarify on this point. I think for everyone, first of all, thank you very much for taking your time. I know I'm having a slightly easier time since it's earlier for me in London, so I appreciate everyone in Hong Kong staying slightly later. For everyone here, I also wanted to thank you very much to the team at Startup Grind. They've been doing, I think, really an amazing job at promoting that event, pushing it out, but also I think so quickly responding on this idea of let's try to educate the market. Let's try to explain to people that compliance is actually not that easy. Compliance can be done better, and perhaps actually the fault line might not be as obvious as we think, and the fault line could be on the regulatory side, but also we could change things. We can change things by asking for more competition. We can change things by moving the relationship where we feel more comfortable for the time being, until essentially there's a matching of minds going forward. So Amrit, thank you very much for the excellent panel. Nick and Simon, thank you very much for taking up on the offer. I really appreciate it.
Thanks for having us.
And if anyone wants to stay, we're going to leave that Remo session and the virtual campus open. So please come and talk to us, and I'll make sure that I'll leave the campus open as long as people want to network and discuss. So for everyone here, thank you very much. And again, Amrit, Simon, and Nick, I really appreciate your time. And Jen, I know you are now muted, but again, think on behalf of CFTE and everyone, thanks for the great work.
Thank you.
Thank you.